Good morning. Thank you for having us. So BP is the last one really of the oil majors reporting really good numbers, and I think you raise a good point. Are we at peak profit? And we have to remember that oil companies are not in charge of the prices that they charge because the market sets that. So, you pointed out already that the oil price, both Brent and WTI is actually below $100. So prices are coming down. So typically you would expect profit to also come down. The companies are still working hard to improve their efficiencies. They're still investing a lot in technology. So I do think there are more operational gains, if you like. But yeah, typically if you have sort of a peak oil price, you would get peak profits. I think that's a fair assumption.
In terms of then their attractiveness as an ongoing investment, do you buy these because they are going to continue to generate high returns, or do you buy these because they are actually quite efficient now at handing a lot of this cash back to shareholders?
I think, everyone will have their own view. In our view, when the share prices of BP and Shell were really low, it was really a re-rating kind of story. But I think where we are now, indeed, you can see them, it sounds a bit demeaning, but, they're cash cows, they're cash machines. And if you sort of add up this modest dividend at sort of growing at about 4% for BP, similar for Shell, but still a relatively low yield. So you're talking 3.5%, but the share buyback is actually in billions of dollars, is higher than what they return in dividends. So you can look at it as a total shareholder return. So they're returning, maybe 8 to 10% of market cap in per year. But, you're assuming that the rating holds, and that depends on the demand for oil. It depends on the pricing. Are we overall slowing down more as an economy? Because the oil, demand for oil is sensitive to that.
We can certainly apply some of these themes to the broader market in the UK. And, last week we were speaking to many CEOs and CFOs, and we've continued to do so this week. And if I'm going to use a Jeff phrase here and say, let me paraphrase, a lot of the companies have been saying things have been fine so far. Going forward, going to get tricky, uncertain outlook, it's, inflation, etc., usual themes. Do you think that we still need to see for the UK market earnings revisions come down?
We are seeing some already, but you're also right in summing it up. This earnings season has been so much anticipated with trepidation, and so far so good. So, but it is an uncertain environment. But I think the more the companies that sell more products that we will keep sort of consuming regardless, feeling more confident. So these are maybe the Unilevers of the world, but others are, they worry more. So earnings have come down. They still look quite high for 2023. The market does look forward. So I think 2022, we're probably okay-ish, but clearly, if the economy is slowing down even more, that will have a bigger 2023 impact. So if we have another call maybe at Q3, we'll be looking at 2023 and numbers are too high. And for the commodity-based companies, it really depends on where the prices are. So if oil keeps trending below $100 and, base metals and others also keep trending lower, then we will see earnings revisions in those names. And I saw a chart this morning that looked at in the US, for example, the main earnings upgrades are from the oil companies. So what happens if that bit goes because the oil price goes down, then maybe earnings decline for the whole market. So I think it is still a bit early, but so far so good. And it really depends on, central banks and what inflation does. There are some companies are saying their input costs are lower in the second half than in the first half. So things are getting a little bit better. And obviously that is good for margin.